Circle CEO Jeremy Allaire joins us now to discuss. Welcome, Jeremy.
Thank you, Michael. Great to be here.
All right, well, it's great to have you. Look, amongst the information that came out yesterday, there was an investor deck you shared, and there was a lot of details in it, one of which was a slide that essentially showed the total addressable market as the entire $130 trillion in total money in circulation. That's a pretty bold idea. Can you lay out the vision and how Circle going public feeds into this?
Absolutely. I mean, look, over the past decades, we've lived with a fiat currency system that's built on fractional reserve commercial bank lending. And when you have a dollar in a bank account, it's actually it's in this fractional reserve money as the M2 money supply, and that is commercial bank electronic money. So that is privately issued electronic money operating within commercial banks. Globally, that's about $130 trillion, which is incredible. I think our premise, and Michael, you've known me since the earliest days of founding Circle. My premise is that more and more value will operate in digital currencies. There's an inherent approach, whether it be the scarcity model of a Bitcoin or the full reserve model of a stablecoin. There's a benefit of full reserve dollar digital currencies. And we believe that as these programmable digital dollar instruments exist on these public blockchains, as the efficiency and utility value of those explodes, that yes, more and more businesses, corporations, other financial institutions, fintechs, and obviously individuals around the world are going to want to hold and use these digital currencies as a primary means of exchange and settlement. And just like the internet itself slowly took percentages of the long distance telephone call business, the amount of textual content being published versus in print. This is going to be a gradual process of a migration of money from M2 type money into digital currency money, and we think that is the target market, and you can choose your time frame and how quickly that kind of change happens, but we think it is that large.
Jeremy, welcome back to the show. It seems that the main competitors, so to speak, to stablecoins are not actually Bitcoin or Ethereum. It's more like central bank digital currencies, right? Which are, also pegged to more stable forms of fiat. So last time you were on the show, you said that the US does not necessarily need a central bank digital currency. I guess my question is do you think that stablecoins will end up serving that role? I mean, is there a world in which stablecoins and central bank digital currencies will coexist, or do you think one will eventually kind of overshadow the other?
Well, I mean, right now we have open blockchains, public blockchains, and we have protocol development and private sector innovation happening on top of that. That is sort of a continuation of the open internet infrastructural model that has powered so many different industry transformations. And I think that is going to be the predominant model that transforms the global financial system. Now, obviously, as this grows and grows to scale, the relationship between the financial institutions that are operating potentially what could become systemically important financial market infrastructures, systemically important payment infrastructures, the relationship to central banks will evolve. You're going to need to imagine that the many firms that participate in those kinds of arrangements are going to have very strong relationships with central banks. And forms of charters that are appropriate to the scale of that they're doing. So my expectation is, private sector innovation, open source, open internet innovation is going to lead us into a world of billions of people interacting with digital currency. And as that happens, absolutely, there's going to be a lot more work to do with central banks, including the Federal Reserve.
Hi, Jeremy, welcome back. I think if you come on one more time, we get to stamp a card and you get a free latte. So always great to see you.
Great to see you.
I want to call up a tweet you tweeted out yesterday where you said, and I'm going to quote here, it says, as we partner with major companies and financial institutions, and as people around the world interact with USDC, becoming a public company is a critical step in providing greater transparency as a firm. So the question that people have been asking is this: what is to stop you from having that transparency now? Are there any legal limitations to that transparency? Because my understanding is that there shouldn't be, or that there isn't.
Yeah, I mean, the key thing here is, as you can probably tell, we've been in a very, very extensive process for many, many months preparing for this transaction and the imminent public disclosures that come along with it. And so what I also communicated yesterday was that our intention is, as part of beginning to provide these public filings that'll be available to the world, be available to the SEC, et cetera, we are looking to add that level of visibility. So these are financial statements, and these are reviewed by our auditors, and they're reviewed by the SEC. So that's the appropriate venue and medium to publish and share that kind of information versus just off the cuff remarks I might make on,
Do you think that it'll happen sometime? Do you think it'll happen sometime? I guess it's around November or so, is given the way in which you structured the SPAC.
No. So what I've said is that so Circle, alongside Concord, the SPAC, are required to file a Form S-4 with the SEC, which it's like an S-1, but for a combination transaction such as this. And that's an extremely comprehensive set of materials and disclosure on the company. And our intention is to include greater reserve transparency there. And that's critical. It's critical because we are building a public institution that a lot of people are building on and depending on. And it's one of the other side effects, as I noted, of becoming a public company in this space, I think it really demonstrates rigor that's needed to operate a global financial institution building this kind of technology.
So, Jeremy, that debate about the transparency, the issue with regards to disclosures regarding reserve holdings and so forth, feeds into something of a debate about the regulatory framework for stablecoins. We heard, on the one hand, Boston Fed President Eric Rosengren make a case for his concerns about the risk of instability that stablecoins might pose, presumably worried about breaking the buck and the idea that the stability of the thing may not be so clear, and that should be more heavily regulated. On the other hand, Randall Quarles, one of the Federal Reserve voting governors, said, "Look, stablecoins gives us this chance to innovate. We should probably do less with CBDCs and focus more on stablecoins," instead of implying more of an open approach to this. Where do you see this playing out, and what sort of conversations are you having with regulators about this?
I mean, look, there's a lot of pieces to that. I mean, I think the first thing is, the United States has had a very regulatory around electronic stored value payment infrastructure. And I don't think that Eric is saying, the tens of billions of dollars of balances held with PayPal represent a systemic threat, or that all the money held by Stripe or Square or Apple Pay or others that are huge and are defining consumer scale fintechs in electronic stored value payments infrastructure. I don't know that the same questions are raised there. So I think we believe, though, that stablecoins are different, right? This is a different innovation. It's a more powerful innovation than these closed loop, walled garden proprietary types of systems of the past. I think it's one that does deserve a greater degree of transparency, and that's why when we constructed Center Consortium and worked on this with Coinbase and built governance models and other models, we went above and beyond what would be needed. So that will continue, and I think it's very likely that we'll see adjustments to various forms of bankings and payments regulations around the world in major countries to adapt to some of the nuances and unique characteristics of stablecoins. And we welcome that. It's critical if we're going to end up, helping build the critical infrastructure for how the financial system works, how financial market infrastructure works, how businesses conduct commerce on the internet at scale. That's totally appropriate. And we look forward to the dialogue and the engagement and the partnership with national governments all around the world.
So, Jeremy, Representative Warren Davidson was on here a few days ago, and he said that depending on what an asset a stablecoin has, it should be regulated as a security potentially because it's too similar to, say, an open-end fund. He said that one of the things that might happen should the taxonomy bill that they're proposing right now in Congress pass is exactly that kind of clarity. If that happens, should USDC, what would keep USDC from becoming regulated as essentially a security? And also, should stablecoins, other stablecoins, face that scrutiny as well?
I mean, look, as you know, the design surface for stablecoin innovation is really broad. Right now, there's an enormous amount of experimentation. Various bond crypto collateralized forms of stablecoins where you're trying to generate pegged value from market mechanisms and incentive designs. That's a huge area there. I think regulators will take a look at that and say, what is instruments? I think digital currencies, dollar digital currencies like USDC are very clearly fit into this electronic stored value payment instrument model that has worked for decades of innovation in digital payments. So I think there is a good framework there. However, I do think that as these reach kind of larger scale than maybe legacy payment systems have, there will very likely need to be different rules. What those are remain to be seen. I don't have an expectation that there's going to be laws swept through Congress that are going to change this. This is going to be something that requires a lot with agencies, with finance ministries, with central banks, with supranational bodies that are looking at this and trying to harmonize and normalize this kind of work, the FSB example, around the world. So it's not, a congressperson says this is what it should be. This is something that needs to be considered and thought through broadly, consistently, and globally, because this technology is a highly global technology, just by its
Jeremy, speaking of global technologies, I mean, one of the biggest, most important developments in the digital currency space is China's development of a central bank digital currency. And I would just be curious to hear your take on, how big a deal is this, right? Because I think opinions vary on this. Some people are like, oh, this is going to really change everything. This is going to threaten the dollar's position as the global reserve currency. And other people are like, it's not that big a deal. People are just, kind of getting a little bit too worked up about it. Where do you fall on that spectrum? I mean, how important is China's central bank digital currency, and what tangible impact could it have on the US dollar and just the world?
Well, I think, in my view, the role of the Chinese yuan in international trade isn't so much going to be influenced by whether or not there's a digital payment system run by the Chinese government. It's going to have to do with broader economic relationships that are deep at the country level, at the trade corridor level, and frankly, the primary thing is the opening up of Chinese capital markets and the opening up of the Chinese currency and the capital account. Those are the things that are really going to impact its use more globally. Having a digital payment technology to interact with the banking and settlement system of China is certainly important, but I think those other factors are far, far more important. In terms of the ECNY project, I think you have to put it in a different context, and I've shared in other forums, which is there's a very large response in China right now to the rising power of private private companies. And you see this in a lot of ways in recent days even. And think when you look at the motivation for ECNY, it's really a motivation to have an e-money alternative to Alipay and WeChat Pay. That in some ways those were powerful. 1 billion people depending on a private e-money. I think that there needed to be a kind of third way. And that was something that could be supported by the state-owned enterprise banks. And I think that's really been the primary motivation, as opposed to some kind of plot to, undermine the dollar globally. If anything, the Chinese are interested in not necessarily the Chinese yuan becoming the global reserve currency, but really establishing, a synthetic global currency based on something like the SDR, which is something that since 2009
I think those are all
advocated.
Yeah, those are all really good points, especially the part about the convertibility of the Chinese currency. But I guess it's not so much about China's secret plan to take over the world. It's more about like the more central bank digital currencies there are, the higher the probability that you can have these cross-border transactions that don't need the US dollar or SWIFT for settlement, right? So I guess looking at it that way, I mean, could that could that world order threaten the supremacy of the
Well, I mean, I think this goes the other way. I mean, today, dollar digital currencies can transact globally without touching SWIFT. And other digital currencies like Bitcoin can transact globally without touching SWIFT. And so internet native money is a profound innovation. It's an innovation that is not just about stablecoins or CBDCs. It's internet native money. It's here. It's growing rapidly and will continue to grow. And that's something that the world has to adjust to. That's something that countries have to adjust to. A world where basically individuals in the countries can kind of vote with their smartphone what economic system they want to participate in. And I think it's a relatively level playing field. One of my colleagues, Dante Disparte, had a recent piece that he published and really spoke to, I think, some of these points, which is that, the United States is actually winning the digital currency space race right now. Its private industry has established technologies out in the open in the free market that are already widely available and can transact around the world. So I think the question is the United States going to try and out China, or is it going to really support the growing innovation that's coming out of the open internet, open blockchain, and private sector space?
So Jeremy, speaking of China, what about Binance? What happens to your business as Binance finds itself in more and more regulatory issues all over the world? What happens to USDC and your projections?
Yeah, I mean, I don't really look at a specific correlation there. USDC is widely used globally. It's widely used across many exchanges, digital wallets, DeFi projects. It's the most widely adopted, dollar digital currency in DeFi. There's just so much activity happening in so many different use cases that are utilizing this technology. It's not tied to, say, one centralized exchange. And so I look at just overall the growth in adoption of public blockchains, the growth in the utility value of dollar digital currencies like USDC, and the continued significant expansion of use cases. I'm excited about when major internet brands begin adopting things like USDC, or consumer-facing fintechs and others start connecting to these networks, as opposed to just looking in the rearview mirror at just the Bitcoin trading exchanges.